Imagine this. It's 2020, peak COVID season, and you've just lost your job. You've been struggling to make ends meet for a few months now and decided to start your own business as a side hustle. Realizing that you need a little bit more cash in the pocket to really get things going, you head over to the bank to apply for a loan, but find out that the bank is unwilling to hand you a loan. And even if they did, their interest rates are way over what you can afford. This is the kind of issue that peer-to-peer lending aims to resolve. Ladies and gentlemen, a very good morning. We are Team Malaysia, proudly representing Taylor's University. My name is Edlin, and here are my colleagues Zian, Tingjie, and Brian. As external consultants to Finvolution, allow us to walk you through our agenda today. We'll start with a brief case recap before analyzing the strengths of the company and the potential fintech market of Southeast Asia and Indonesia. We'll then identify the key issues of the case and introduce our proposed strategy, Finvolution. This will then be followed with its respective risks and impacts before we conclude our presentation with a summary of our key points. To kick off our presentation, let's begin with the case recap. Finvolution, as the name suggests, is a fintech company in China committed to their mission statement of technology makes finance better. Starting off as the first P2P company in China, they pivoted their direction and built an empire on technologies that enable financial services such as fraud detection and credit risk assessment. They were massively successful and by the end of March 2020 had amassed more than 108 million registered users. With the fintech arena in China rather firmly in their grip, Finvolution is seeking out opportunities out beyond the waters, with expansion plans beginning with their up-and-coming neighbors in the Southeast Asia, particularly Indonesia. But before sailing the boat into deep waters, we're reminded of something that Aristotle once said: knowing yourself is the beginning of all wisdom. So, allow my colleague Tingjie to bring you through an analysis of Finvolution.
Thank you, Adeline. Here's a quick overview on the company's SWOT analysis. And our goal here today is to focus and leverage on what the company does best in order to explore growth opportunities and ultimately empower people that are underserved. So first thing first, what does Finvolution do best? Boasting 4 key data-driven technologies, the company has built a successful presence in China, giving them the ability to consistently outgrow themselves with their ever-improving data system built on top of a self-reinforcing feedback loop. The result? It became the largest fintech player in China and has now set its eyes on the international market. As mentioned in the case, Finvolution has recently obtained a P2P license to operate in Indonesia, which is a great opportunity. And what's really interesting here is that with its successful records in China, Finvolution has a great chance to overcome the data barrier that any new market entrant is set to face. Now, let's take a closer look together to examine the regional macroeconomic conditions. First of all, we know that governments in Southeast Asia have been doubling down on going cashless for the past 10 years or so. And in fact, 42 of the world's top 100 fintech companies are currently operating in this region, showing promising signs that a regional ecosystem is being formed. We also found that each and every consumer in the region uses 2 or more fintech services. Yet, the readiness to adopt fintech isn't reciprocated by any market players, as card ownership in the region is only at about 25% currently. Hence, we know that consumers in the region are ready and willing to adopt more fintech solutions, but no market player have come in and filled the gaps. So now, knowing that macroeconomic conditions are good, let's take a deep dive into Indonesia. Here's what we found. There are 3 key success factors unique to Indonesia. Number 1, market potential. We found that card ownership in the country is low, and being the 4th largest smartphone market worldwide, Indonesia has a great deal of market share out for grabs. More importantly, the country's smartphone penetration rate has been growing at a 5-year CAGR of 22%, which is 4 times more than China's 5.3%. Talk about replicating success. Indonesia certainly holds some serious potential. Nonetheless, there are other competitors we might want to look out for, but we'll be addressing that later on. Next, the government's contribution. The Indonesian government has invested $500 billion for P2P infrastructure and has been setting up departments like the FinTech Association to provide a conducive business environment. As a matter of fact, P2P regulations and code of conducts have been stipulated to ensure customers and other stakeholders are protected. One of the key items is whenever a foreign player were to enter the market, the regulators would require a 15% local ownership. This is something we can play to our advantage, especially when there are partnerships to be formed with local institutions and enterprises. But the exact steps of how it could be done will be explained later on by my teammates.
Next, the third key success factor is target consumer. In Indonesia, a large consumer sector would be the SMEs. This is because, shockingly, most of them have no access to credit, and therefore, they don't have the funds to implement their ideas. Now, can you imagine what change they would be able to bring if they were given the credit? They could bring so much productivity to the economy, and livelihoods can be improved. Hence, through peer-to-peer lending, consumers can gain access to productive loans, validating why Indonesia is an optimum choice. By diving deeper into their primary consumers, however, Finvolution's consumers can be categorized into two different segments, the lenders and the borrowers. Based on our findings, each side of the lending transaction has their own specific concerns. For instance, lenders invest their capital into the platform and therefore they look for fraud prevention and also responsive customer service. Whereas borrowers search for convenience, competitive fees, and interest rates. Most importantly though, both sides want secure data protection and transparency. Subsequently, all these concerns point us towards the key issues that must be addressed. Hence, our solution is Finvolution. With Finvolution, the volatile fintech regulations can be addressed through equity and knowledge sharing with local partners, whereas data protection and privacy can also be assured by leveraging on the company's data-driven solutions. Lastly, software as a service will also be offered in order to differentiate the company from the competition. Now, for an in-depth explanation of the strategy, I will pass the floor to Adeline.
Thanks, Zian. Finvolution is a strategy of two parts. Firstly, the expansion of P2P and the exploration of new business opportunities with software as a service. The P2P expansion is further broken down into three key processes: the regulation compliance, operation, and marketing. Key impacts of our strategy plays into both the social and financial aspect. SDG 1 and SDG 11 will be satisfied through Finvolution with a 5-year NPV of $35 million and a payback period of slightly over 2 years. So let's dive right into the first aspect, which is regulatory compliance. As fintech situation in Indonesia is highly regulated, we will ensure compliance through the use of council auditors and, most importantly, strategic partnerships. Council auditors will be a specialized department in the expansion team where individuals who are well-versed and familiar with the fintech environment will exercise due diligence of market conduct. As expansion already banks heavily on the existing technologies, the regulations on data privacy and protection will also be fulfilled through these data-driven solutions. This specialized department will also be keeping close ties with regulatory bodies such as DOJK to ensure quick updates and complete compliance, eliminating as much space for error as possible. Operational risk will also be identified and mitigated through the works of council auditors. Activities such as self-assessments and tracking key risk indicators will further solidify Finvolution's standing and gain customer confidence even before stepping foot into Indonesian soil. Besides that, strategic partnerships is an essential part of complying to regulations. As mentioned in the analysis, the OJK has mandated that 15% of foreign fintech companies should be owned by an Indonesian party. We see this mandate not as a hindrance, but as an accelerator for a successful expansion. Having someone on the board that understands the culture and hidden rules of the Indonesian society is truly invaluable to Finvolution. So, after council auditors are created and strategic partnerships formed, Finvolution must also consider their operations in foreign lands. Beyond catering for individual lenders, certified financial institutions will also be onboarded. These institutions will be exposed to a greater number of previously untapped consumers, with Finvolution acting as the guarantee that low credit risk individuals are paired with their suitable institutes. There are a few reasons why this strategy calls for an immediate onboarding of these institutions instead of just focusing on individual lenders in the initial stages. First of all, this will greatly increase our capital accessibility, which is much needed in the market, as shown by our analysis. The introduction of financial institutions will increase the supply of available lenders, thus enabling Finvolution to cater to the vast majority of SMEs and individuals who still need access to credit. One main concern of consumers is that the Indonesian society require credibility from P2P companies. And with them being extremely trusting of their banks, seeing these institutions on our platform will certainly bump up our credibility in their eyes. Finally, as great as the situation is right now, we don't want to ignore the possibility that sudden changes will occur. With the addition of these institutions, we'll create an inbuilt risk control mechanism to keep FinVolution's head out of water if a sudden regulatory change, such as seen in China, occurs. Now, every grand venture will ultimately fail if you don't bring it to the masses with a great marketing plan. On to you, Brian.
Thanks, Adeline. More importantly, to ensure a high probability of success in their Indonesia market development strategy, FinVolution must implement effective market adoption tactics. The providence of financial services to the masses, where monetary transactions are involved, credibility and trust are of utmost importance in penetrating prospective Indonesian users. To further establish credibility, FinVolution could form partnerships with local authorities and entities in the realm of financial services, such as OJK, the Financial Services Authority in Indonesia, as well as AFPI, also known as the Indonesian Funding Fintech Association. Through such collaborations and mediums, FinVolution could regularly organize campus roadshows and campaigns in various regions in Indonesia. Such campaigns would aim to educate the public regarding the impact and contribution of fintech to the development of the Indonesia economy. And of course, this also raises FinVolution's presence and positive influence in the country. Beyond tethering such credible entities to FinVolution's name and earning customer trust, these on-the-ground channels or roadshows will allow FinVolution to be closer to the customer and gather customer data, such as loan preferences of prospective borrowers and risk profiles of potential lenders, ultimately allowing for validation of product market fit for future and existing loan product offerings. For example, analysis has shown that the average Indonesian is more risk averse towards their investment strategies. Stemming from this fact, FinVolution could lengthen its P2P model's payback window of its borrowers to tailor their loan product to this market demographic. Beyond that, FinVolution could start exploring other loan products. Case in point, my teammate Adeline will role play as an Indonesian mom residing in Sumatra, Indonesia, a rather rural and underserved province. She's overburdened with raising children and managing the household. Through extensive on-the-ground market research, FinVolution will have found that they could provide a microfinancing option as an Indonesia-specific product for the Indonesian mom. This will give her greater monetary capacity and empowerment, giving her a leg up to enter the public sphere as a businesswoman, expanding her role beyond a housewife to a breadwinner. Yay, you go, girl. Moving on with the strategy's marketing channels. Firstly, as the company onboards financial institutions as lenders, they could have these institutions list and market FinVolution's financing services on their platforms. They will also have referral programs. So when lenders or investors invite other users onto the app, they get to enjoy lower utilization fees for their first investment. As for borrowers, they get a small sum of monetary reward to kickstart their businesses. The starting point of all achievement is desire. FinVolution has great ambitions in envisioning themselves to be the Amazon in financing. Thus, they seek to expand into new business opportunities. Hence, our market development strategy is also accompanied by a product development strategy for horizontal expansion. We've recognized that the company could capitalize on its digital capabilities as well as research engineering expertise that they pride themselves so highly on by spinning up a new software as a service subsidiary, presenting FinSolutions. From its risk rating model to AI data analytics to automated customer services chatbots, this software as a service strategy will reap substantial revenue, user retention, as well as adding additional customer acquisition channels. Let's take a closer look at the proposed business model for this subsidiary. This technological service arm will mainly be serving two customer segments. First, on the left, we have enterprises and banking institutions. Banks could utilize FinSolutions, consumer credit solutions, and risk assessment services. For enterprises, they can engage with prospects like Tokopedia, who are very eager to venture into financial services. For pricing, the businesses will be based on a subscription model. Additional costs will be incurred through if they were to request for upgrades or maintenance. The other more interesting customer segment would be FinVolution's existing or prospective borrowers. As the company's usual borrowers are SMEs and young entrepreneurs looking to finance to start or scale their businesses, in this digital era, Some of these customers would most likely be looking to set up an IT infrastructure, whether it be automated customer services or advanced AI analytics reports. So what value can FinVolution bring to the customers will be to offer a bundle package, financing bundle with FinSolution software services. Through this bundle package, consumers get to enjoy greater cost savings as they cut down on IT services costs and are more disposed to allocate their finance money to non-IT means, such as advertising or human capital. We've talked a lot about our expansion strategy in Indonesia, as well as detailed a potential horizontal business opportunity. So what's next? So let's take a look at this roadmap. As aforementioned, FinVolution will be establishing P2P lending in Indonesia through appropriate risk modeling for product market fit and forging partnerships. Next up, we propose that FinVolution expand greater investment in expanding its technology offerings to scale up the proposed software as a service arm. This subsidiary arm will play a crucial role in future geographical expansion. Why? Because software services are easily globalized, not tied down by strict regulations, and allow the market to gain more exposure to FinVolution. So when they expand into new foreign markets, it'll be way easier to market or cross-sell their core P2P lending services. Moving forward, we've identified Singapore and Thailand to be potential next steps for their Southeast Asia expansion, as they possess similar demographics, such as risk profile, smartphone penetration rate, as well as the need for the cutting-edge digital infrastructure that is provided by FinVolution. Next, I'll hand over to my teammate, Zian, for the strategy timeline.
Thank you, Brian. As for the timeline of the strategy, we will first start off with the development of the P2P lending platform in Q1. Concurrently, regulatory compliance will also be completed in this stage as the company builds its relationships and partnerships with local parties. Subsequently, FinVolution will be launched and marketed in Indonesia throughout the following quarters. As with any other strategy, there will be risks involved. Hence, the first risk would be sudden regulation changes, similarly to what happened in China. The inbuilt mitigation for this would be finger-on-pulse methods, where we closely monitor fast-paced sources to stay updated and foresee oncoming changes. Secondly, in the case of poor acceptance by the Indonesian market, we will ramp up referral incentives and conduct targeted marketing to attract more users. Lastly, to mitigate the risk of data breach, the company will also carry out constant assessments and authorization of systems. Moving on, Xingjie will walk us through the financials and impact.
Thank you, Zian. Based on the company's financial statements, we're able to project the revenue for the next 5 years. Major revenue items will include loan facilitation service fees and interest income. As for the operating costs, major items will include origination and servicing, sales and marketing, as well as R&D. This graph here shows the incremental free cash flow for the next 5 years. It's a preliminary estimation, so it is rather indicative than conclusive. As you can see, in the base case scenario, our strategy will create a 5-year NPV of about $35 million. However, we're aware that acceptance in early stages might be poor or better than expected. So having considered that, we've also included a conservative scenario as well as an optimistic scenario. To finance our strategy, we recommend FinVolution to take on some debt instead of going all equity, mainly due to the relatively higher cost of equity. With that, we're expecting a payback period of slightly more than 2 years, and we're confident that in the average case, our strategy will bring in a very lucrative financial return. More importantly, our strategy aims to empower underserved groups, and it's estimated that at least 5.2 million MSMEs would benefit from our financing solutions. In terms of revenue, the total income generated in the first 5 years is expected to reach at least $870 million. Now, to conclude our presentation, I'll pass the floor to my colleague Adeline.
Thanks, Xingjie. P2P lending is the key to opening up financial services to a wider Indonesian audience, especially in the MSME sector. With our strategy, FinVolution, we believe that the company will be able to successfully penetrate the Indonesian and subsequently the Southeast Asian fintech market while creating an impressive social and financial impact. Thank you very much. We'll now open the floor to Q&A.
Thank you very much for the presentation. Now it's time for the Q&A session. That we have 15 minutes. The countdown starts now. Let's hear the first question.
Can I ask the first question? Yeah, so I have a question about the position of the data of the firm. So, do you guys see your firm primarily as a software company, selling software as a service for large bank to use as a white label bank, or do you see yourself as a platform business company like Airbnb and also Uber, etc., so that you can actually crowdsource the demand and supply side of the financial ecosystem? So, and for each of them, what is the revenue model around it?
Thank you so much for your question. Perhaps I'll take this question. So I'll leave the financial areas to our finance guy over here in Jingjie. But to answer your question of what we see FinVolution as is definitely someone who utilizes technology and with an overcoat of financial services. So ultimately, we don't try to make ties with Uber or the such, where we see our comparative towards Amazon instead, where they're where initially they are essentially they're a tech company where they use their technologies to further increase their e-commerce overcoat. And we aspire to be the same as Amazon, where we are essentially a tech company who is providing financial services. Hence, if we want to bring back and harken back to the strategies that we propose, ultimately they are software solutions, but with an overcoat of financial services.
Yeah, if I may add on to your software as a service, since we're already proposing a software as a service strategy, right? This would be a subsidiary so that our revenue stream, we have an additional revenue stream, so it won't be tethered together. So it's sort of like a diversification strategy as well, and also like a horizontal business expansion strategy. So why we decided to go with this software as a service strategy is because we've recognized that right now we're already providing a financing platform for people using our really advanced and cutting edge risk model, risk assessment model, as well as those instantaneous customer procedures. So we recognize that there's a need outside in the market for this. So not only are we serving, I want to emphasize that not only are we serving external stakeholders such as banks or enterprises, we recognize that we could bundle this as a value-added service for financing for our borrowers. So because think about like a startup these days, right? When they want to, in this digital era, when you want to start a company, you want to set up a website, you want to set up analytics, you want to set up, customer service chatbots, right? So not only can they finance with us, borrow money from us, and also we could bundle it with this technological offerings to them. So it's a value-added service, and barrier of entry into pivoting to this, quote unquote pivot to this, wouldn't be as high. So that would be sort of our revenue model and how we would diversify our revenue stream.
So there are two roles. One is for a software company for the large institution, and the other is the software company for the startup incubators.
Yeah.
Okay.
My question is, what is your target audience? I think you mentioned, like in the presentation, entrepreneurs. Then I also heard about the example of Indonesian moms, and so could you expand a little bit on what the plan is?
Yeah, if I may clarify, are you asking for the target market for P2P lending services or the emerging software as a service strategy?
The first one.
Yeah. Okay.
P2P services.
Okay.
I suppose I can take that question. Thank you very much. So for the P2P lending services, we have identified that the MSMEs and also the individuals, they have a lack of access to credit, and that's why they are our target consumers, especially because we see a lot of potential that they can bring to the economy if they have this access to funds to really carry out their ideas and start their startups. Hence, they are our target consumer.
Also, to add on, Mr. Bar, you mentioned about the Indonesian mom, right? Right. So because we were initially in China, we were already targeting these people who have lack of access to institutional funds. So in Indonesia, things are a bit different. Even though our loan offerings, the interest rate or the payback window might be different, but we decided that there's actually an additional opportunity here for various products, specifically microfinancing, because Indonesia are filled with rather rural areas and underserved provinces. So as we could use our existing underlying assets and sort of spin up this new product called microfinancing, So this ultimately will be a new additional target segment, but also I think the most important part is the social aspect, right? So I think most of us would hear about recently ESG investing, right? So people are more pivoting to more inclined towards investments that are more towards sustainability or social empowerment. So we hope that this microfinancing strategy product offering in Indonesia would also sort of raise our ESG rating as we increase our social empowerment, given that we're also a public, given that Finvolution is also a public company. So yeah, ultimately also increasing our investment attractiveness.
So if I can build on Deborah's question, so what you're trying to do is to help the borrowers to build better credit profile to get better financing options, right? Is that correct?
Yes, and perhaps if I also may. Oh, so sorry, Brian. Please go ahead.
No, you go ahead. Sorry.
All right, thank you so much. So ultimately, we also understand that this is aligned with what the government in Indonesia is also going towards, where they're currently pumping in money and infrastructure. For example, they're pumping 500 million US dollars into creating an infrastructure and expanding the P2P lending services within Indonesia itself. So we see this as a very interesting area where we can come in and fill in the gap.
Thank you. Let me just chip in here with a couple of questions. One is, understand the solutions you're providing, be it the P2P solutions or the Finvolution and the Fin solution, which is the software platform. What were the alternate solutions or options you explored before finalizing upon these two, and why would you not choose any other alternatives that you've explored? Second question is, this being essentially a China-based company, and the learnings are quite deep in China market, what are the key learnings from there that you have picked up for the solutions for Indonesia? So what are the China learnings for Indonesia solutions? Yeah,
I will answer the second question while my other teammates will tackle the first question. So what are the learnings that we've learned from China? So as we've seen, as in the case study as well, numerous hundreds of financing companies have sort of bankrupt because of government regulations cracking down on not allowing retail investors like you and I to invest in these to lend money to borrowers, right? So what have we learned from this is, so as our solution proposed, as we touch upon Indonesian market, not only are we going to start liaising with retail investors as lenders, we're also going to start partnering with financial institutions. So not only will this give greater capital accessibility, but it also forms as a risk control mechanism, as when there's a sudden change in the Indonesian government interest, as like in China, cracking down on not limiting accessibility for retail investors to invest in financing platforms like us, then we could more swiftly pivot to the financial institutions. So we wouldn't face any great disruptions in that sense. So that's what we've learned from China and what we've proposed to implement in Indonesian market development strategy.
And perhaps if I may answer the first question, Mr. Arnab, definitely one option that I've considered, that we've considered as a team collectively, is definitely the option of just copy pasting the model that is currently in China, which is institute to peer, and directly placing it into the Indonesian society. However, although this will be easier in terms of how we translate our business into a different country, we don't see this as a viable option because number one, again, as we have mentioned earlier, P2P lending is already highly incentivized and highly encouraged by the Indonesian government. And besides that, we also want to touch more on the social aspect and what we can give back to the society besides just cash grabbing. So ultimately, we decided to go with our current strategy of Findonation.
Thank you. Maybe just a follow-up on that is, you did mention in one of the issues or challenges slide there was the regulatory changes, the data privacy, the third one was competition. Can you elaborate upon the third one? It's a very crowded competitive market. What is the reason or right to succeed for the Finvolution when others have not been able to be so successful?
Thank you for your question, Mr. Arnab. Maybe I can take that question. So essentially what's special and what differentiates us from other competitors is mainly how we leverage on our technologies to build around this software as a service model, right? So So because of our technologies, our forefront technologies around this software as a service, we'll the way we carry out our operation will be different for all different market segments that we're targeting. So for example, as this software as a service would leverage on the company's market leader position and their reputation in the fintech industry to ensure high retention rate when the company uses a subscription model. So they can focus, they're more focused onto their sales and marketing, while they have ensured that they have captured a large market share in the first place. So, which is also what I'm trying to say here is that the technologies provided the company the advantage of being able to leverage on their technologies to sort of like ensure that they are building on based on this subscription model to capture more market share in the future. Yeah.
Yeah.
Okay.
To really crystallize. Oh, sorry. Yeah, if I may crystallize the message further, right? So what I think was mentioned by my colleague Jingzhe during the presentation is right now the technological gold mine that FinVolution sitting upon is a self-reinforcing positive feedback loop. So what I mean by this is, compared to a startup starting in Indonesia wanting to start this P2P finance lending platform, compared to us, right? We really have this model with weightage, correctly weighted parameters to correctly assess people's risk profiles and know your customer procedures almost instantaneously. So we could just sort of feed the data of consumer data that we're going to do right on the ground through the roadshows to directly feed into these parameters to instantaneously gauge the risk profile, as opposed to a newly startup company in Indonesia trying to get on the platform with no infrastructure or with perhaps lower percentage of sort of performance in this sort of artificial intelligence area.
Can I ask a question on writing on that context is, for example, if I'm a decision maker in a large bank in Asia Pacific, that I would like to enter the market of Indonesia in that credit lending area, and I'm looking for a software as a service partner to help me to do all this kind of stuff, right? So what is your advantage to convince me to partner with you compared to finding other large tech giants company like Amazon, Google, etc.? Is there any particular strength that you can convince me to choose your product instead of the other guys?
Yeah, if I may, sure. Let's say you're a big financial institution, and perhaps Grab is also sort of dipping their hands into financial services. But let's say I'll give two value propositions. So let's say the first one, the immediate one is, because we already have access to these various market regions, we already have the risk profiles, we already have the market sort of economics, right? So you can sort of by partnering with us, you can sort of know how the economy is doing. For example, if let's say a lot of people are start lending a lot through our platforms, they know, or perhaps business confidence are growing in the country or in the region, or maybe a lot of people are borrowing. Maybe there are emerging software companies coming up because they're leveraging both our services as well as financing. The second value proposition is I'll give a case study on this. Is, let's say you as a bank, right now in Singapore and Indonesia, you can see a lot of emerging companies going into the buy now, pay later. So as a concept, so you see Singapore, you have Rely, you have Willa, right? So why can these companies immediately, with no background check of customers and offer them no interest rate continual payments? But why can't banks do this? Because banks, they face more scrutiny because of government regulations, and the whole know your customer and background check process is very long, right? Compared to a startup, they don't have to do all these background check. But if you use our risk profile, for example, instantaneous risk profile assessing, you can sort of start competing with these private companies, because you can do a background check, but also not compromise on the speed of getting these customers' profile data. So perhaps, the saying that fintech companies will, financial institutions will be the doom. Fintech companies will be the doom of banking institutions, but I think with our service, with our value propositions, I would beg to differ. I hope that answers your question.
Thank you so much. unfortunately, I have to interrupt now because the time is out. Thank you very much, the team. Thank you very much, the judges. The team, you will be placed in a waiting room for about 8 minutes to give the judges time to elaborate. Thank you very much.
Thanks so much,
Thank you, team.
judges.